Let's go. So yeah, today's session, or what I'm going to be talk about today, is a little bit of higher time frame setups or opportunities that maybe we can take advantage of by being patient. It's something that can be easily identified because our setups, actually, that I'm going to start paying attention to them. So I'm going to even share kind of what I'm going to try to be looking for. Yes, so it's trying to find out or identify price moving in one direction for a while, maybe trending for 2, 3, even 4 days, if that's the case, and then eventually try to catch the reversal. So yes, this is a little bit more of a counter trend setup. You can, of course, always use the same information, but just reverse it, and in terms of looking for the continuation setup. Like if you do identify a little bit of a trend, try to look for the continuation of the trend until kind of you see price completing or filling a specific space, maybe based on the compression zone or some kind of trend line or a specific high that you are looking for, expecting price to go there. But if you're looking for the reversal, it's literally kind of expecting price to show some exhaustion. Maybe if you're about to identify that kind of move on the RSI, maybe you'll be already starting to pay attention that price may be over bought or oversold, and most likely is going to start showing some kind of divergence in there as well, because between maybe what price is doing and what the RSI is doing. What kind of move am I going to try to look for? Especially in the last phase of the move, I want to start seeing some weakness. I want to see literally price compressing in that momentum. Right? Maybe can even separate the movement, and usually you can separate the move in 3, maybe maximum 4 movements, which is kind of the moment that the price actually turns. It's kind of the first phase of first part of the move. Then it's kind of when it retraces a little bit, but then it creates some momentum. We call it kind of the second leg move in here. Kind of whatever it may be, this a little bit of a retracement, sometimes a little bit deeper, or sometimes actually we create this kind of fake out in here, kind of, and then we continue. So whatever that may be, that's kind of the second part of the move. And then you have a third and a fourth movement, which is most likely this second leg can also gain some momentum. Sometimes it's going to have the same length of the distance between the low and this high, but we can then kind of track it the same distance. That can be one way to find out the target for the second move. And then we enter into the third moment. The third moment is when price finally starts to compress a little bit, show some weakness before maybe entering into a phase of turning, and this may be actually what you may consider the fourth moment of the move, this final reversal, where maybe all this in here can be considered the third part of a move. Is it something that sometimes you guys like to pay attention to or try to identify, kind of separate the moves of the trend kind of in 1, 2, 3 phases or even 4 phases? Is it something that you guys pay attention when you are looking at the bigger picture? Yes or no? Anyone? Let's collaborate, guys, in here. Is it something that you guys try to pay attention?
Personally, I'm not.
Sorry, I didn't understand what you said.
Personally, I'm not like analyzing that way. Maybe I should. Yeah. But I'm not.
Yeah, go ahead. Sorry.
Oh, I said not really.
Not really. Yeah. Anyone try? This can be actually a good example of what you can see in here on the card. How this move. That's kind of the cycles that we're just talking in here. Of course, it may vary a little bit, but yes, we do have kind of the turn, a little bit of the second move. In this case, it's composed with a double bottom, so price goes all the way through test. But usually the last moment, and this is a little bit of what you usually want to see. Actually, it's a little bit of a momentum, of a separation between kind of this move away towards that momentum until we kind of start a little bit of a compression before maybe we have the turn. And usually a way then that you can analyze this, and a way to then try to identify targets within this movement, especially when you're trying to catch the reversal in here, it will be exactly that. Maybe you can even use this 1, 2, 3, 4, kind of 1, kind of 2. 1 second. Let's actually do something like this. 1, 2, 3. God, it's really dropping. And before in here. All right. Then you can even use these ones as a target. In here. Yeah. Oh, yeah, that's it. Cut is over. Because initially, the first target that you are going to aim to in this kind of movement is going to be the lows at the beginning of this compression, kind of the beginning of the move of the third phase of the move in here. Kind of that. This is going to be for sure most likely one of the targets that you are going to aim to when price does reversal. If then it's going to be a consequence of if you do break this level. If you do break this level in here, then maybe targeting number 2, and then if by any chance number 2 then is taken as well, then eventually we can target all the way through test the lows at number 1. Right now, the way then price navigates between breaking this low, maybe first goes all the way back in here under test, and then it drops, right? Then when you do kind of finally break below this level, then maybe the only move that you're going to have from here is to here, kind of number 3 again, and just continue. And this is kind of the dynamic that you can even start to separate like this, which is nice, right? Of course, this level here is also important because that's where basically the extreme of this compression stops. Then you have this last move. That's kind of the fourth part of the trend, because usually when price is about to turn, it actually creates some momentum either to the upside before turn or kind of to the downside before going long. That's something just natural to look for. So yes, if you now start preparing it like this, eventually you want to start identifying. First of all, if by any chance you identified number 1, if you identify the low and you don't manage to get into a long position in here, you can start trying to identify what number 2 is going to when it's going to happen, and if it's a number 2 or it kind of just a continuation to the downside, right? A way to try to predict if this is a number 2 is actually, of course, we need to look left to see price. First of all, if number 1 even is reacting from a good level on the left side, that's always something that you need to do to validate that is maybe number 1. And then, of course, starting to notice at least some of the highs on number 2 to be able to break previous highs on approach. That's something also important to pay attention to. But more often than not, some kind of behaviors that occur on number 2 is something like this. As price kind of is moving higher, we're going to create a little bit of a range. We're going to have some kind of confirmation that actually price wants to go higher, but usually more often than not, we're going to actually have a final move down in here to take this initial structure that was created in here, and this is when we're going to finally then create the momentum to go to the upside. For example, a strategy that some of the guys were trading with this second leg move is the triple MA moving average that you guys learn from the strategy from Alphachain, right? it was actually work that I was doing with some of you guys that were trading this strategy, because for you guys, it's going to be impossible to catch the bottom, the number one move. But usually the crossover moving averages, they start to occur somewhere in here. So that's usually somewhere in here. It's usually the type of trade that you are going to be able to catch the second part of the move, which usually can have some momentum. It may take a little bit of time. You may need to have some patience, especially some kind of patience of waiting for some kind of fake out of these lows before maybe the second leg actually occurs, and it creates that momentum to then price to go higher. There you go. After price finally has that move, that's when usually starts a new compression. That can maybe be originated with price breaking some highs in here, and then price kind of take the high and kind of pause a little bit, and from here it starts to go higher. We're going to literally see some space between this low and whatever demand it was created, either in here or even if there's some other demand created in here, you're going to literally see a separation between this low and this one. There's going to be some momentum being created in there, sometimes super intense, sometimes a little bit smaller, that you're going to find out, which is going to eventually to be the target when price, as I mentioned, completes number 3 and eventually turns of creates number 4, and this is going to be our initial target in here. And that's basically the type of movements that I'm going to start personally, even to start paying attention to. They may take a few days to develop, even maybe weeks, of seeing price kind of making all these move upwards. Sometimes this number 3 movement, it can even take a couple of weeks or 10 days or a full week to develop. We have seen that happening already quite a few times, even on euro dollar and so on, before maybe a major turn. Sometimes this number 3 part, it actually looks like a range, maybe a range and a little bit of a move upwards, but kind of a super range in here before then finally turn and we move down. Something interesting to see as well is in between in between the phases of number 3 to number 4, it's nice to see before we actually have this big spike up. To complete number 4 is actually to start noticing, as I mentioned so many times, lows being broken. Like, it's even nice to see maybe a proper low being broken in here before we actually have this spike move to the upside and maybe taking these highs. Right, so if you do have that kind of behavior, that's even better, because this initial breakdown is kind of the first indication, or one of the indications that actually price is about to turn. And this kind of spike, or this last spike that you are seeing, is just usually to collect liquidity to then reverse price. Have you guys kind of visualized this kind of situations happening before or not? When you guys are looking at the market, when you see reversals happening?
Yes.
Right. Yeah, that's that's a good answer.
No, I've seen it a couple of times.
Yeah.
Famous for me, the most famous one was, you remember when dollar yen broke on the Friday 151? Or reversed on that Friday?
That was a long time ago, no?
I remember that because I dumped, then I got squeezed part of my position against it. That's why I remember it. I just got squeezed. I started to dump, and then I thought, stop. That's the reason why price is moving up so quickly.
Yeah, that was a super extreme case, because that's when the BOG was starting to print money or something like that, not just to buy bonds or something like that, right? Yeah, that's a good example. Yep, even these guys can be even a good example of the separation between number 3 and number 4 happening in here. Just this example in here, we have a little bit of a range. All of a sudden, price breaks below this range. What does it do afterwards? A strong spike upwards. Kind of the break in here usually it's a sign that also enters within the compression zone. So what we are doing is basically opening the door to fill the space all the way to the bottom of this number 3 phase. Which color should I use in here? Yeah, basically opening this door in here to fill this space with this low, and then price, instead of just filling the space immediately, it actually goes higher first, takes out the liquidity from these highs, and then yes, this then eventually can be one of your final targets. Maybe you can have a little bit of a more conservative target still within this structure as price is moving down, but eventually that can be literally one of your targets. I just miss Aussie short. So I was looking here. Yes, with Aussie, for example, is a good example of what you are looking at. Sometimes actually this can actually be a really long setup that, as I mentioned, takes a few days. Some other times you can actually try to find out this happening on the intraday sessions, and today can be a good example. Especially when you do have, especially if you just even start to pay attention to these number 3 zones and then kind of number 3, number 4 together, that can actually be a really nice setup. Not always price is going to go all the way through and go fill kind of all the way back to number 1. Sometimes price may just pause in here in the middle, and maybe the target from this value is actually much higher than this. But that mid retracements that sometimes you have, they can be predictable as well based on this approach. Again, basically in here, we're just looking at the approach. Eros is giving me, just minimize this chart. Yes, basically we're just looking at the approach because number one thing, as you guys know, always we have to try to find out where are we actually reacting from on the left side, right? Any questions so far, guys? Any questions from this kind of pattern, kind of behavior from price? Any questions? How do you guys try to trade this? If you're starting to be aware of this kind of 1, 2, 3, 4, how do you try to trade them? Regardless, maybe number 1, number 2, number 3, number 4, and kind of what kind of triggers would you like to see in between those phases, and where would be maybe the target in here, right? Because you can even think about it in terms of actually try to capitalize the move from all the way here, maybe until upwards, or kind of the reversal, kind of now that number 4 occurred, maybe open space in here, and now actually I'm trying to aim towards the number 1. What kind of approach, or kind of how you kind of develop that that thought process in there?
I have a question. In the first phase, do we expect some sort of reaction from a demand zone or a fade out?
Yeah, that would be the ideal. Let's pretend that, of course, that number 1, this low actually needs to be reacting from something important, either a strong level maybe of support resistance, or maybe a demand zone, or maybe just broke a daily or weekly low, and because of that, actually price now is going to have a deep retracement until maybe it retests the high that is created in here, right? If this is kind of a high, this is a previous low, price meanwhile goes upwards and now kind of goes in here and just breaks this low. Maybe now we're expecting price to maybe to retrace to this high again. Yeah, kind of, it's important that number 1, of course, number 1 can be one of the hardest things to predict, right? It's the bottom, it's going to be the bottom or the top. So number 1 is going to be a challenge by itself, try to find liquidities and so on and so forth. Usually number 1 is going to be maybe somehow similar to number 4, right? So it's kind of start reversing. Number 1 eventually becomes number 4 in this case. Yeah. All right. So how do you guys do it?
Well, I always try to catch the extreme.
Yeah, you would like to trade number one, right? Number one, number four, that's kind of what you'll be looking for.
Yeah, it's most risky. Sometimes you get stopped out 1 or twice, but yeah, that's my style.
Yeah, that would be. Yeah, that could make sense.
Yeah, the same. 104. I try and look for either continuation or reversals. Reversals like you drew on number 4 at the top. Once it's taken out the previous lower higher low, and after the taken out the higher low, I would then look for a supply zone at the top of level 4 to take the sells. I usually use the fib, so I mean anywhere after the 50% to like 79%. If there's any nice indecision candles or buy to sell candles or sell to buy candles, I'd look at those zones. So like say after the 61%, roughly around there would be good zones to be looking for, supply zones. And I would take that as a reversal. Continuation in on the number 4. I'd want to see it touch the demand zone, the closer to the higher low, the previous lower high. React from there, push up, and then I'd on the smaller time frame, I'd look for a similar, just like breaker structure for the upside, and take it for a continuation.
Continuation down, or
if number four was to come down, react from a demand zone, and then turn push upwards. I'd probably look for a continuation. But I wouldn't. I'd take it to probably the on a smaller time frame to like the top of the structure. Because sometimes it might just be that it's reacted from the demand zone, goes up to the supply, and then breaks the structure to the downside. So on a number 4, I'd probably won't hold on to a continuation for too long. I'd mainly look for a break of structure for the downside, what I've just like explained, and take the cells where you've got the blue box.
That's a good point, right? Because we'll be talking about as well managing expectations of kind of the type of trade that we're going to be looking for as well, depending on where we are. Maybe within this cycle between 1, 2, 3, 4, and so on. For example, number 4 usually it's a moment. Number 3 usually can be a zone where you have maybe similar to what you have right now on the indices. Maybe not exactly on the euro dollar and pound at this point. I wouldn't call it that. That was more, for example, not this one. That was more in here, kind of this phase, a little bit before the turn. It's kind of, this is a little bit of number 3. Then you have the move below, the spike up with the news, and then we finally have the turn, right? That's kind of a little bit of what we have. And usually in a bit, so what I wanted to say, between number 3, usually there's going to be opportunities to either go long short, because it's that phase of maybe creating a range, or we have a proper compression zone, and how this compression is built and created is by price basically going up, going all the way down, take the demand, go up, go all the way down, take the demand. Sometimes we may create it above top. If the tendency, and if you're kind of bullish, the tendency to eventually to keep taking the highs slightly, then we have another retracement and another in here until finally we may have the first break of proper low, and maybe can even try trading with a trend line. Sometimes those trend lines kind of work quite nicely in here. Until finally you may have that first of break of a low that kind of starts showing some proper weakness, and then usually that's when you finally have number 4 being created. Right, so number 3 usually can occur or can provide really nice opportunities for both directions. So that's kind of okay, but we kind of need to be aware that if by any chance, if you are looking for any kind of move like this, most likely that's not still going to occur until you actually have a proper move like this. For example, Nasdaq last week, when it finally kind of took that structure, finally then it could move to the downside. Where, for example, Ari I think got short in there. I'm talking about this move in here. Right, finally moved away, and then it finally could move down. So yes, that's a little bit of number 3 zones that you are trading. And if you are aware of this, and this again can last 10 days, can last 1 week, can last a little bit, quite a lot of time. This is 1 hour time frame, right? It's basically maybe all the way from whatever 12th of January all the way to the end of the month, right? Basically 20 days that it lasts, this move in here. So yeah, this is basically number 3. For example, Yusef, this is now to touch point on the number 2, which number 2 can be a little bit of indecision still, right? Because number 2 is that phase of we are not sure if this is going to be actually kind of a reversal now to the upside, or by any chance we are going to actually continue to move down and eventually even break number 1 and maybe then create new lows and just resume the bearish move, right? That's why that's a little bit of an indecision that can occur in here. And sometimes you actually manage to break slightly 1 or 2 lows that maybe actually show that maybe price wants to go much lower or kind of resume in here, but all of a sudden price doesn't do that. Price actually kind of breaks a low, but then kind of it starts actually going higher instead of moving down. So in here it can be a tricky situation of people getting stopped out. Because many are still kind of think this is just a retracement, maybe to this high, and after this we're going to just continue. But actually, price is starting slowly to change directions, and this can actually be a really nice move, especially after we do have that fake out happening. Can be a really nice move to look for a trade. And more often than not, actually, this kind of move it actually occurs in a kind of that quasi-model pattern, kind of retesting or getting closer to these left shoulders that price kind of creates initially. Somewhere in here, it's actually a really nice moment to look for a long opportunity to catch that move. If you are a little bit confident that the low is in place, then kind of as a continuation pattern, you can even try to enter a retest of these lows, or after we have finally a proper break to the upside after the fake out, we can actually even try to for an entry on the retest now of this structuring here. It's either kind of this structure or that structuring, can actually try to then capitalize on this move. Sometimes can be also some kind of break of a proper trend line in here. And kind of price retesting. Sometimes actually this fake out actually is just that fast move down to retest the trend line now on the other side, and kind of price moves upwards after that. I believe that some of you have seen that kind of movement quite often. This is actually a good example again, right? You can see what's happening in here. This price moving down, price creating a little bit of some fake lows, finally the fake out, and then you have a proper break to the upside, and where does the price goes and retrace towards to, kind of basically just retesting this level, and from here you have that second leg move. So all this basically was kind of this level in here is created around the second leg move, and after that we have, in this case on the card, we never really have, or it never really happened, kind of that momentum. Price is just been compressing all the way through. Again, sometimes it happens like that, but I think you guys can see exactly what type of pattern am I talking about in here. And this price now finally moves away after creating this number 1 in here, right? Can you guys see it? This one in here?
Yeah.
Yeah, right. And this is kind of where Kyriakos last week, unfortunately, got stopped out twice, but that's exactly the move that that he could have benefited. Like this was a kind of a, even though it's still kind of a reversal because price literally is still moving down, but it's actually kind of a continuation at this point. You are literally trying to attempt to look for that breakaway now from this level. Of course, if you can identify some specific target that maybe price actually wants to go out towards this size, maybe can from here try to hold price all the way until there, right? But this is kind of the second kind of opportunity to try to get long in this move if by any chance you didn't manage to get into here. For example, another example of this, and this is kind of what I was about to mention before, is Yusef. I don't know if you remember back in, when was it? Back in the end of February. Do you remember that long euro that you had in here?
Yeah.
Right, this is a little bit of a second leg move as well. Our price kind of testing that low, kind of the low being created. And if you actually zoom into the lower time frame, this is kind of a little bit of what you have in here. Price kind of literally breaking away. This is number one, and this is kind of number two movement being created. And you got long somewhere in here. Unfortunately for you, just close it in here when you can see what kind of upside you can see the upside,
Yeah.
right? Even though it was already a huge risky word because you interview in the war time frame, so it's so kind of a 3 or 4 to 1, but you can see the potential, right? So again, that's why before when you were about to mention that you most likely like to trade number 1 and number 4, in reality, I think you're going to be able to actually be super happy if you manage to catch these number 2 levels of catching this next leg to the upside, because usually price does indeed react from really nice levels of demand, or again the pattern that you usually kind of look for, right? And trying to there, which is usually it's around a demand zone either way in there, right? And there you go. That would have been a great trade opportunity. And then of course, maybe if you zoom out, if you change the scale, maybe now whatever, maybe this is even part of that. Yeah, but I think you can see it. This is another one kind of created, kind of it's a little bit of a range. Price creates momentum, price creates compression, and then eventually there's the turn. I think now that we're going to eventually start looking at price moving, you're going to be able kind of slowly to separate these moves in here. Kind of this is a good example as well between maybe number 1, kind of number 2 in here, kind of creates momentum. In this case, kind of the compression is literally basically all this kind of have a little bit of a separation there, but all the compression starts from there, kind of a little bit from number 1, number 2. This sometimes a little bit together in there. Again, you can see literally the separation here, even a little bit in there. We finally turn, and as soon as we turn, as soon as we kind of enter again into this level, again, this is already a breakdown. That's why all the month of February we have been targeting this wall, right? Since we did this, out of this has been the target all the way through. Then it's about trying to find opportunities to rejoin the move. Again, similar, number 1, which is number 4, then number 2, then kind of start number 3 in here until finally we go all the way through. Like it's a little bit different because the demand zone literally was still fresh in there. Kind of we were forced kind of to have this strong move down before kind of we resumed up. But you can see that this is number 3. It's basically number 2, number 1, and whatever reversal now is in here for number 4. You kind of flip it. Can you guys see it, or is it just myself?
Yeah.
You can see it, right? And yeah, that's for number 2. Number 3, another point, for example, is number 3 is it's the trickier one, right? 1 second. Something in my mouth. Because usually it's a good one that's going to create a lot of compression. There's going to be some kind of barrier, kind of almost invisible barrier that's going to be created in there. And for some reason, it looks like the price is about to always break, but then kind of it get rejected and kind of keeps going down. In this case, or in this case in here, it keeps going up. Even with strong news, it looks like price is about finally to do this, but it just pauses and continues to go higher, right? So it's around this level, especially if you do create that some kind of fake out. That's when you kind of try to look for longs in there. In this case, kind of continuation. If you have a clear target, that's where kind of you can, if you want, keep trying to push. In this case, kind of looking for some opportunities, trying to keep pressing price to go until the target that you are aiming for. In this case, it would be that level. In this case, in here on euro dollar, I think all of us were aware that euro wanted to go a little bit higher. I don't even remember where we are now, but I think price wanted to go a little bit higher to take these highs and push somewhere there. I think initially I was looking for price to go here, but price actually went a little bit higher. But you're looking for to push price higher, especially when price was still in here, literally to get closer to these highs. So if you are aware of that, and if you want to take advantage of that, and if you have that bias on the number 3, is when you have a lot of compression going on, but you can't, anytime price is at close to the extreme, maybe you can try to attempt to look for that bigger target, which hopefully maybe price eventually will get there in here. Yeah, it's kind of a little bit of a number 3 situation in there as well. Where are we? Yes. So basically, what I'm going to, again, for example, number 3, something that it's interesting as well. And this is when sometimes you pay attention to the alignment in the market, which is sometimes actually number 3 doesn't really evolve to number 4 when you are expecting, maybe because, for example, maybe the dollar is still not in the right place or zone to, for example, to completely shift. So kind of the euro is still kind of going to keep trading within this range. And maybe when dollar is finally ready to move higher, or maybe it's the indices or whatever asset maybe we are waiting for, maybe then it's going to be the moment when finally euro is going to do this, when the dollar is ready to do this. If you guys remember last February, it was exactly that, right? Like dollar literally spent so much time in that range in here, right? It spent so much time in here while euro was moving around just between the levels that you're looking for before, until finally dollar made the final move, which kind of escalated everything else, all the other pairs to finally start moving and to go as well, right? Sometimes number 3 may take a little bit longer, which requires a lot of patience, exactly because of that. Maybe one of the pairs is still not ready, or one of the major pairs, the most important pairs is, in this case, maybe dollar, still not ready to turn. So price will continue to spend time in here. This is where usually you see maybe some kind of news, whatever, GDP comes out, it was negative. Maybe you were expecting dollar to go down. It looks like it's going down, but it just pauses and reverses straight away and kind of starts coming in here. Basically, every single spike of this was some news that in theory it was negative or positive for the dollar. Dollar was trying always to go higher, but it was not. It was paused, it went up, paused, go down. Went up, kind of found a barrier, go down. And what you have in here, right? Finally, the first a little bit of break of this highs, showing you where it wants to go next. So there you go. Now it finally took these lows. This was then with the FOMC, then ECB, then BOE. Like it was that week, right? The crazy week at the beginning of February, which may be similar now in the beginning of May, when you have also FOMC, ECB, and so on. That week with NFP to complete the move upwards. In here, for example, this is a nice one. Can you separate this one? Right? Can you separate this move in here?
Sure. Well, you catch the bottom first day, then you have overnight the retracement, or midday the next day move higher sometimes.
Yep, just actually moving here. So this was NFP, to be honest, in here. Let's actually do the exercise of looking at this dollar index. It's a good one, right? I think you guys can separate. You mentioned the bottom, right? So we finally have the bottom. And the bottom, kind of a little bit like Kyriakos asked, yes, it's reacting from a good level, and you have all this liquidity. So for the bottom to be created, it's nice also to have some kind of lows in this case, since we are turning to the upside, some kind of walls to collect liquidity, enough liquidity, so price is finally ready to move to the upside. And another point, we want to see already a break to the upside even before the final wall is created. So if you do find a lot of walls, or at least one strong wall, maybe a good level of a demand zone, and you have a proper break to the upside even before the final turn, those are kind of 2-3 conditions that it can also almost guarantee that this is maybe the bottom for now. Yeah, go ahead, Ari. Now, number 2.
Well, number 2 is usually like a midday retracement, overnight retracement on the move, and usually the next day, or in this case, I think it was over the weekend, and we open up much higher, or it's the next day, or it's after the US Open, before US Open. It's like it's usually some sort of pause. Depends on the size, and then, well, that's the first move which I'm looking for, which I missed the second half.
Yeah. In this particular case, it was NFP, which was within this rectangle that was just underlying, which is we have this kind of a little bit in here, and we finally have kind of this move. This was NFP continuation again. Where does it go to? A nice little level to go to kind of retest these previous lows, kind of have a little bit even a break of a high before that. There's even this high also even breaks before kind of make this move down. There you go. Second leg of move, or kind of the momentum of the second leg, it was somewhere in here. And as I mentioned before, I believe if I even was about to draw or to include the moving averages for the triple MA, most likely it's impossible for you guys to catch this move, but most likely in here you already have your moving averages crossing to the upside, and this is maybe even their RSI, or maybe MACD is already giving you literally bullish setups or signals to look for longs. So yeah, this would be literally number 2 move, and you have the momentum created. Yeah, go ahead, Ari. Continue to tell us the story.
Well, I mainly know the first part of the story, but because I trade that and I missed the second half of the story sometimes. But then a lot of times there's a shift in price, and price just starts trending slowly, or sometimes pauses like for a couple of days or a day, go sideways or down, and then it starts to slow trend upwards.
Yeah. And this is kind of where the compression starts, right? Kind of when that move kind of starts to be created. In this particular case, it's kind of weird because price actually kind of it started. This is where the suppression starts, and then kind of everything else in here starts to be almost compressed all the way. And there you go. We kind of have first break, and even I think maybe confirmation in there of another move down, and you have once again liquidity created in here eventually for the dollar to turn. But as you can see, we have basically price somehow respecting every single low, even in here kind of respects, until finally we have a proper breakdown, which is kind of then it creates in here. So eventually, for example, as a target for this move, maybe initially you can look for this, but as soon as you break this level, your target can go all the way, maybe retesting these lows. And this becomes a really nice setup in here, which is maybe something similar to what now Joseph was saying when he described how we would like to trade number 4, right? It's very similar to that. Most likely we draw some kind of Fibonacci level in there that you can identify. It was above the 61.8. In here we have a beautiful supply level. Most likely this is maybe where Joseph would like to trade, which is somewhere in here that we just described before in this one, right? Makes sense, right? Joseph, is that something that you'll be doing? And if you're there, yeah. Sorry, Ari, then final move, the number 4, which is maybe your favorite because that's when you have the most contradictory behavior, right? Which is seeing price shooting to the upside, and then you go you go to full reversal?
I think my favorite trades are the first, the number 4, maybe number 3, sometimes intraday, the intermediate top. But the rest of it, it's just boring stuff for me. It usually leads for me to make mistakes.
Yeah.
My best trades and what I love the most is number 1 and number 4, which are the extremes. Let's just check my Nasdaq chart. I'll trading over the past couple of days, and I can show you it's exactly a similar idea.
Yeah, the 2 shorts that you took, right?
3. I attempted the third and the fourth, and I could see where I made the mistakes. Just interesting. Yeah.
Of course, sometimes you are not really sure when number 4 is about to happen, right? Sometimes we might think that number 4 is even somewhere within the number 3, right? It's kind of after we seeing actually that price is still not really creating the momentum to go down, or maybe if by any chance you still are aware that price hasn't really broken any particular low in this case, that's when maybe you can still consider that, okay, maybe this is a good selling opportunity for intraday or maybe for 2 days, but maybe price actually wants to still go a little bit higher before actually maybe making this, right? And this is where also kind of looking left can give a little bit of that idea. But yes, many times you are going to be kind of trading one of these highs that is created during number 3, thinking that maybe it's number 4, and well, of course it's going to be okay, right? And there's still good opportunities in here to try to capitalize, even as a reversal. Like we're at this point mostly talking about reversals. There are really good setups still somewhere in here to trade them. But yes, again, being aware of maybe where price is on the left side, maybe a little bit to the correlation, maybe if there is some kind of big news event that may actually force the price maybe to do another high. Yeah, and it's particular if you still haven't had a proper break of a low. More often than not, when you do have that proper break of a low, we're still going to have that fake out happening in the end. And then yes, and then kind of you are ready to then fill out compression that you can see in there. Yeah. Yeah. Anyone else has any comments? This is okay. Do you want me to share this, Ari?
I don't mind. I just looked at it now. I realized I zoomed out the past couple of days, the mistakes that I did, and the arrow shows where I'm supposed to trade, not where I took the trades. Sometimes I took it, sometimes I got hit out, but then there are some trades which close to earlier, I just took it anyway, random trades, it's a pure mistake. Yeah. The green arrows is we are supposed to buy according to my strategy. According to my strategy, well, if I have a signal, and the red one are sells.
Yeah. Yeah, and more of, and most likely, even if you start doing the exercise, maybe you are on 15 minutes, right? So maybe you can even try to find out where are actually kind of this 1, 2, 3, and to see that move then occurring, right? Of course, on the 15 minutes, maybe you need to go a little bit into lower time frame to actually see then the process of identifying that happening in there.
Even today, I got stopped out. I didn't enter it again, and I missed the big move all the way.
Yeah. Yeah.
That's maybe a number 3. Today's move.
Maybe all this is a number 3. Eventually, in the bigger picture, if you actually zoom out for the final turn, which price may go still a little bit higher, right? So there you go. Like within these 2 weeks, if you imagine that all this movement that we have been trading for the last couple of weeks on Nasdaq, it's actually our number 3, right? But even within number 3, there's still good opportunities in intraday to look for. Something that I like to see, definitely, even if it is a number 3 or whatever, it's of course it's kind of that liquidity, right? That's something that I want to find out, right? When you have a little bit of a highs, there you go, fake out, then kind of a little bit of a highs and fake out, then kind of a little bit of a highs, then fake out. That's something that it's kind of essential for me at least to look for, right? And then kind of you end up almost creating that pattern in there. Yeah, that's something always that I try to look for. And yes, with number 3, more often than not, you can actually start to, for example, to draw some trend lines that can help you to then make that prediction, right? Of identify, especially, for example, something that I actually start paying attention to is a bit messy, but so within number 3 is to be able to kind of draw some kind of trend line, right? Kind of draw some kind of trend line all the way to the base of the beginning of the move in here on number 4. So kind of until somewhere in there. Hopefully, no, actually quite a bit with the opposite, because I want already to see this low of the number 4 to break the trend line. Kind of it breaks into the trend line already. Again, just to show indication that it wants to go lower. But then what I like to see is actually in this fast move upwards, maybe to be able to draw another trend line. Sometimes kind of price may be a little bit moving like this before finally turns, and maybe you're going to be able to draw another trend line in here, a little bit more kind of, how do you call it, strength in the west cliff or high the cliff, whatever, comparing with the previous one. So kind of the previous one is like this, and this one is like this, more aggressive, right? And eventually when you do turn that one, maybe we can feel this one, and eventually can actually go all the way and feel the next trend line, which it's the compression zone altogether, right? So sometimes you can identify by using these trend lines, can help you to identify the turn occurring in here. Yeah, right, which can be interesting. Yes. And what I wanted to say, sometimes, yes, these movements, they may take time sometimes, which can be useful. For example, if you don't have all the time in the world even to pay attention to the market, maybe this is another way to maybe add a couple of more pairs into your portfolio. You can just keep an eye on them. Setup alerts, it's important, like at the extremes, try to see when the actual price breaks it or not. Eventually to catch the number 4, like to catch the reversal. Keep an eye on them. Let price evolve. Again, another situation, it will be if by any chance you notice that price is trending for 1, 2, 3, 4 days, most likely price is about to have some kind of retracement, right? Even if retracement is just maybe towards the previous level of support resistance that maybe you can find, maybe that's enough for a good trading setup in there. Like for example, Euro Yen could have been last week a good example of that, right? Even though Euro Yen is just continues to move higher, kind of trended a little bit higher, and eventually kind of, because it has been for so long creating, there you go, bullish candles. As you're approaching maybe a good level, there's a tendency to at least have some kind of retracement, even if price then wants to continue to move higher, right? And of course, kind of targeting the next demand zone could have been a good setup. There you go. This could have been your trade somewhere in there. Again, if you're looking for longs continuation, just flip it and do the opposite. Yeah, just flip it and do the opposite in there. Which can be interesting. And now we actually took all these lows, which can actually took this high. Can actually be a good short now. Yeah. So now don't really fight the trend either. Like I don't want you to start selling everything, every high that you see. Like don't do that. Because that can lead to a lot of losses in a row. So be patient. Actually, wait for this weakness. Wait for weakness on price, right? Wait for weakness, for example. Wait for price breaking lows, and most likely, for example, this demand zone. This is a way to find a target, right? Maybe this one now is fresh. Price kind of broke these lows and never really reached that level. It paused a little bit in here. So eventually, when you do have that turn, maybe you can aim to this target, and that's it. That's your trade. Maybe intraday setup, but that's maybe your trade in there. All right. What you want to find out, even on intraday levels, is exactly this. Try to find out when price breaks some lows, and instead of feeling this price going to this demand zone, it doesn't. Kind of starts moving higher again. Keep following it. Keep following it, because we may be close to a potential kind of reversal. In this case, price took a massive high from October, a monthly high. So after that, kind of is a little bit of a tendency to have a little bit of a retracement. Maybe in here, it's a good target for a short, maybe a good setup to for a continuation to the upside, which is kind of also retesting this level in here. Maybe. Yeah.
I fell in that for today. I was trying to show you again when the price was, we think it's moving to the downside.
Where was it? Sorry.
As the price was compressing to the downside. And
in here?
I was trying to place shorts there, and I placed two shorts with target that supplies on there, and I got closed out twice.
Yeah. And this goes a little bit with the again press retest this level. Yeah, after the break of this could be one of the zones, and then of course this level. But it's where actually looking a little bit to the left side, it's important, right? And kind of how attractive kind of this high is in terms of eventually like waiting for it to be taken before maybe aiming to that reversal, or kind of to look for the bigger short. Yeah, waiting for that to happen before that in here. Yep, that sometimes that's why it's also important. But yes, there you go. Eventually, if you kind of keep following it, it requires a little bit of patience, a little bit similar to Martin is not here, right? But what we did, Martin and I, when we were in the live stream last Thursday, if not mistaken, we did Aussie yen to catch kind of the sell in here, right? For example, Aussie yen it's a good example as well, right? A lot of compression, a little bit of a range created in here. We kind of start showing a little bit of weakness all the way into this beautiful supply, and then finally we turn. It requires a lot of patience to wait for price to do that, but then finally turn, and we finally kind of being able to maybe catch that move. And this Aussie yen, maybe it's one of those that actually it may actually go all the way and fill this price, right? So again, I want to see weakness, a lot of weakness on price. It just gives strength to the to eventually maybe we can feel the move. Yeah. And maybe just to finalize, maybe I haven't mentioned yet, is how then to participate on number 4, right? Which is exactly like that. Paying attention to where that last high is created. This is a bit messy. So kind of to review a little bit of what I mentioned before, that will be when we finally break that high, and that maybe it's going to be the high of the number 3, right? That price is kind of forcing down. Eventually, when you kind of break this high for one last time and maybe make that move higher, as I mentioned quite a few times, you are going to create some kind of structure in here, maybe some kind of demand or something like that eventually is going to push price higher. So what you want to find out as well is whatever structure is created around this level, it needs to be broken to the downside. Otherwise, it's just a continuation and price will just continue. So eventually, you want to see this level in here being broken to the downside, to which it opens price to, there you go. Now we can maybe go all the way and aim to this low, if not even to actually aim all the way through to that compression. So you want to try to find out where is that structure that is broken to then open the door for you in there. Example on the Aussie yen, it would have been, since we kind of have all these highs in here, to finally break a little bit, it will be somewhere in here. Again, strong compression up, then we have the turn. It will be somewhere in alignment with this structure in here. Maybe this kind of in here, this small demand zone. As you go higher, you break below, and it's kind of then where you can even aim to look for the sell, or if you want to even wait for more, maybe after the break of this, kind of opens the door for price to go there. Where this price goes to, we test this left shoulder in there with the supply in there, and you have another possibility to look for the move down. All right, so that's there you are. All right, so you're going to have your opportunity somewhere in here. You can even aim these left shoulders, kind of something in here as well, and then goes in alignment already with the previous webinar that I did, which is when we finally turn, where are the orders that usually price goes under tests towards to, right? As I mentioned, there are maybe 2-3 levels that usually price eventually goes under traces. All right, what have I done here? All right, you guys remember what are the most likely 3 levels that usually price goes under traces from? Number 1, it will be the extreme, which in this case it was left behind, so price never came here. Number 2, it will be kind of this level of supply and a little bit underneath that eventually creates that break of the low, and then could be kind of the retest of this kind of low support resistance. Sometimes there's going to be some kind of, again, the left shoulder, which was a previous resistance, eventually kind of becomes support in here, and eventually it's going to end up as resistance again on the left side, right? So we have kind of number 1, number 2, and eventually number 3. At this point, number 1 was taken. Number 1 was never taken, it was left behind. Maybe in the future, price can go there. Number 2 was respected in here, and number 3 was respected after actually kind of broke this low and price retraced. There you go. We have number 3 price going there. So in the future, whenever that may be, there's maybe even a little bit of a zone in here, but there's a high probability that maybe number 1, it's going to be the destination for price. If by any chance price still wants to respect that level and go higher, or otherwise price may even respect it a bit, breaks it, and then kind of respect it on the opposite side and just go along from there in here, right? Here we go. So this is kind of a way to trade number 4. Yeah. Any questions, guys?
No, that was it. Thank you very much.
Okay, man. That's basically what I'm going to be looking for. So that's my strategy. I'm going to be looking more for those kind of setups, even maybe add maybe a few more assets, because I'm going to literally wait. I want to see proper price getting exhausted for a few days before maybe eventually take the trade in a bigger picture. Yep, that's kind of what I'll try to be looking for. Yep, with all the rest. So yeah, and then being aware of maybe where number 1, number 2 is. I rarely trade number 2. It's something that I need to try to change, because number 2 is actually offer really good setups. Yes, and I think Ari has mentioned it usually happens maybe 1 or 2 days after we have the bottom or the top being created. Yeah, I completely ignore number 2s, because number 2, it looks like it's already as a continuation setup after the break of after we have the bottom in place. So number 2 looks like it's already kind of continuation to the upside, which I don't tend to look for, but it's something that I need to start trying to take more advantage of, because usually they offer actually really good setups in there.
Number 2 is like similar to what the trade I took from last February, you mean?
Yeah, something like that. Yes, when you finally kind of catch that, it's not really the bottom. So I love the bottom. Like I similar to Ari or some of you, I like the extremes. I just like the extremes.
The extremes, yes. I mean, the extremes on the higher time frame are more more better to take than the extremes on the lower time frame, because sometimes you feel like it's the lows in and then it carries on the lower time frames.
Mm-hmm.
I've been victim to that a few times. But yeah, on the higher time frames, like the 4 hours, the 1 hours, when I see it come into a zone, I like to see that it's broken out of that zone, especially strongly, and creates the imbalance, creates like an opportunity, and then when it's coming back down to retest, usually if it's a corrective in nature as well.
Mm-hmm.
I like those setups. They're quite good confirmations as well. But you're right. The extreme is good sometimes. Really, really good. Just depends on do you trade the extremes from, like, you're talking from the higher time frames, or just
Now,
straight away from the long?
Yeah, this is a good example. I like when I'm in the extremes is literally this low. Of course, then it depends on where it is in there, right? This is a good example of exactly what happened on the card. I remember on Friday, this was the 14, when again there was that spike across all the different assets with the retail sales, whatever it was. I wanted to trade. I was looking for the long on card in here. I was following price. I was starting to see price literally getting weaker and weaker on the approach, and we are actually literally reacting from the one of the last points that price could bounce from. Otherwise, we just break the lows. So, and I miss it. I missed the short. I missed the long. Sorry, I missed the long in here that I was trying to look for. I can see price starting to slow down. What do I see as well? This actually was a good trigger for me. It was a break of this high just before kind of we had the news. But the news was actually super fast. I was not expecting this spike, which automatically kind of price, it started to get too far away, and kind of my, I hate kind of to have even stop losses bigger than 15 pips, whatever, and starts kind of to be too far away from even a potential stop loss, and I would definitely still cover this low. So kind of the trade kind of, it was not there anymore for me, and was kind of, I'll try to scalp into it. And that's it. I missed the big short. I missed the big long opportunity in here at the extreme of the extreme, and I kind of ignored everything else until maybe waiting for price eventually in the future to get closer again to this level, and then I'll try to catch it. So, and I was aware, and I mentioned even the weekend before that most likely next week we're going to see a continuation on the card to go higher. But I ignored all this. This is number 2, right? I literally ignore all this. While Kyriakos, for example, was still looking for the longs in here, and there was maybe really nice opportunities. If you actually now dived into these levels on the one time frame, you can literally see this demand zone. It's a beautiful demand zone, and as price is actually moving away from here, there was actually really nice opportunities to try to continue to look for these longs and kind of to catch this move. This is a second kind of leg move. However, I will still kind of wait for price to get there. But I'm aware that especially we already kind of break a little bit of a zone. We literally reacted from a nice zone in here as well. I'm aware that this can be a good zone for price to resume the move. It doesn't need to come here at this point in time. So that's kind of what I mentioned, that I want to start being a bit more comfortable, looking for opportunities in here, even though I'm aware that this level is still fresh, but that doesn't mean that price wants to go there in this moment, maybe just whatever it may be in the future in there.
If you zoom back to the low that you would have preferred to get an entry in,
here with the spike.
Yeah. And see, when it's entered into the demand zone, obviously for you it moved very quick into the opposite direction. But see the correction in the middle, and then that correction caused the break of the previous high. Would that still be considered a second, like a number 2, taking a trade from there, from that correction? Because then
it could. It could, like if you are looking at it kind of in this time frame, which is looking literally at 1 minute, right? This could definitely be, because we actually have a little bit of structure. Again, if you pay attention to the structure, we have a lot of lows being created in here, and all of a sudden we have this strong move down and reverse, right? Again, we have all these walls that never touch this one. So this one is literally fresh for price to touch it and reverse. In which we already have kind of even another break of a high, even the break of this high, which price wants to go higher, right? It's just question mark of where is going to kind of this will react from. And not even just that, even then we have, as I mentioned, we have even the break upwards and then the retest of basically those walls that we just fake out. This in here could even be the best entry. It would be maybe this one. We break up to the upside. We have 1 minute candle to retest the demand zone, and we go down, you go upwards. Like in here, actually, could have been the best entry ever. Maybe you could even just place a stop loss below this level if you want to, and then for the rest in there. Yeah, definitely. This okay. Consider maybe number 2 if are actually maybe looking at this 1 minute, but if you
at the 1 minute zone.
Yeah. If you're looking maybe at 1 hour time frame, maybe that's still number 1 kind of, and this is now number 2.
So that's similar to what I was trying to look at in the February, that February trade, was that once it entered into my points of interest on the 4-hour chart, obviously I broke into the lower time frames to see the structure to be broken to the upside. Once I've seen that, I tend to look for the first correction or the first zone corrected to that caused the price to break up, which is to your left, and then obviously take that as a zone to take a trade from. Obviously, I'm just trying to improve on that a lot as well, because sometimes you get stuck on the lower time frames, it becomes a problem. Staying back onto the higher time frames and then working into the lower time frames and then going back to the higher time frames is something much better to consistently do, rather than because sometimes you get too stuck into the lower time frames, you forget what's going on, and I've made those mistakes a couple of times. But that's pretty much how I would do it. So it'll be like a mini number 2 on a smaller scale, but still consider the number 1 on the bigger scale. Yep.
Yeah, that would be it.
And that was the discussion that we had last time, that I'm leaving a lot more money on the table because I was catching a lot of the trades on a bigger scale, number 1, but like the smaller scale, number 2, like you see now. And I'd most likely aim for the highs of that tiny.
Yeah, it's just in here, right?
Yeah. So
and
I'd most likely take a 3 to 1 there, and then miss the rest of it where there's like a 6, 7 to 1, 8 to 1.
Yeah. Yeah, exactly. This is very kind of, again, it's important to find kind of which zones are we trying to look for, right? And that's kind of why I'm even separating the levels in 1, 2, 3, or 4 to look for, right? And then this is literally if you zoom out, like the only way that you can see that this is number 2 is if you actually zoom out, right? And if you actually maybe aim to see that maybe this is the target that maybe price is about to go to, this is actually maybe a level of structure that price just breaks. We have again a little bit of structure that fake out like this, and then eventually we'll have that move upwards, right? Yeah, that's the only way that you can see that this is kind of a number 2 in this time frame. Yeah.
If you've got really some big cojones and hold that little trade all the way to the top of there, I mean, you'd make a good killing.
Yeah, this one could have been paid for. Yeah, this because of out compression. Sometimes which price just creates the momentum, and you take advantage of it.
When you're looking at it from after, and you look at it now, you think, wow, great opportunity to hold. But when you're in the moment, it's extremely difficult.
Yeah, of course it is.
You're sitting there thinking, no, it's going to reverse. No, it's going to take me out. You know what? Protect my capital here. I'm going to put my stop loss here. So many things just going on,
and that's why it's important to again, if you start doing this exercise of separating like this, Because if you're aware that maybe, again, it goes as well to the importance of identifying where your target is, or maybe what kind of actually setup you are looking for with the potential of a moving here, right? Then of course, sometimes you may hold it all the way through and then price starts reversing and you don't really, and you may miss with money on the table. Some other times it actually goes all the way through and you may capitalize in a lot of it. But being aware of that, again, this goes with the, for example, this move on the dollar, on the CAD, it goes a little bit with the correlation that basically this Friday, all of them reversed. All the pairs, the most important pairs reversed exactly with this spike, with this news, everything. Dollar went up, euro went down, pound went down, Aussie went down, dollar CAD went up. So all of them kind of reversed. So in this case, kind of you are starting to expect finally also where euro CAD, dollar CAD is reacting, right? It's reaching from that to on the left side. So if there's a way, if there is a zone that price can kind of react from a low and go higher, it will be these lows, right? Because from here, then price will go, if price breaks these lows, then it can go much lower, right? But if by any chance we are within this range and price by any chance even wants to go halfway through there or even to test this high, this will be the level maybe for that to happen. So yeah, kind of we start to combining a little bit of a few different things, and that's when you maybe want to try to push it. Of course, don't even recommend to try to look for home runs every single time you're in a trade. It's just kind of when things align. Yeah. Why not? Why not to try it?
Yeah.
Yeah. The same way that even eventually when CAD maybe turns, whatever it may be, if this is a little bit more higher, for example, maybe the target for all this, it's maybe actually something in here, which maybe this is beginning of maybe this kind of number 3 and this maybe our number 4. Maybe all these movies number 4, maybe number 3 actually starts from this compression. So after you actually take this high, maybe, yes, you may have a little bit of a retracement, but maybe this is actually the target for this move. And maybe to fill this space inside here, and then maybe can actually maybe resume the move down. We'll see what's going to happen in there. Right. But maybe this is actually a little bit of the target to look for. But yeah. Now it depends. If you are about to get long in here, I wouldn't advise you to get long in here and target all the way there, because maybe price is close to have a small retracement. But if you are still long kind of from here, yeah, maybe the target and maybe what you could aim for is maybe actually this level. Because the likelihood maybe of price doing this is maybe not that big. Maybe price is just going to do this instead. Yeah. Kind of. Yeah. And this, for example, this euro, it all started with analyzing this Aussie yen with Martin in one of our mentoring sessions that we did, exactly to look at those higher time frame levels. Again, this low starting from a really good level in here on the left side, and you start looking at okay where it will be a natural zone for what will be the target from this one, right? I think price was somewhere in here when you starting to look at that. Like, and you saw all this compression. Price hasn't really reached that extreme, and then kind of we noticed, okay, this high in here would be actually the natural zone to look for a target for price to kind of complete the move upwards, with even the possibility of maybe even fake out the high and maybe getting a little bit higher. But at least all the way through this end of the level, that will be kind of the level. And yes, and then all of a sudden, if that's kind of a good target for a long, maybe it's a good zone actually to start looking for a sell. We start identifying that we have all this strong compression. We notice that price starting to range, which is really nice to see as well before a reversal. And that's kind of wet kind of to start looking for a sell as soon as price kind of react from there. On that day, we're literally looking for sales in here on the Aussie yen. Right. Again, it's a setup that it took like from Tuesday morning all the way to finally Thursday in the afternoon to finally execute the trade. Right. Days of preparation.
Yeah.
But then yes, then maybe you are into a huge trade opportunity. Yeah. This is literally kind of the work that I'm going to start paying attention more. If you guys are doing something like this as well, and this, for example, it's some analysis that you can do over the weekend when you are more kind of a little bit more maybe a free time, market is not moving, so I'm more relaxed. Yeah, just let me know if you do find some opportunities like this, because I want to try to trade them. So if you find them, let me know. And this kind of work that then we could even start working together as a team to find these kind of moves.
Yeah, can be.
Yeah. For example, DAX is another one. I haven't even traded DAX, but DAX is another one. Kind of V3C, this compression zone. This is V3 with the demand zone, can work as a target. Yes, I was looking for a short. I've been looking for a short on DAX. Oh, oh my God, it really fake out the high turn. When did this happen? Just before the webinar. Jesus.
It was really quick.
Oh my goodness. Because I wanted to see the fake out of this, and I was still interested in selling, man. I've been in a battle with DAX because it literally the zone that I'm looking for a sell, it goes there kind of 5 minutes before market closes. I'm not really going to open a trade in there. And this was the first time that actually it was a good time to look for it. It's still a good level, man. Oh my goodness. There you go. You see a break. Literally, this was kind of break, compression. There you go. Turn. Fake out this guy. Literally, this one kind of a very break. There's even, let's see how price reacts from this demand, but there's maybe the chance for price to go and reverse, maybe even go lower. But yes, for a few days, kind of price compressing, literally with this zone in here as a target whenever price kind of turns. It's another one with the potential even to go even farther below. If by any chance, if you do eventually break below this low, I'm going to be aiming towards here. And we are again reacting from a good level in here on the left side. Like just another one. I must have never been interested in selling DAX, but I've been. You can see the rejection of price kind of getting the seller starting to get into it. So there you go. Starting to see exhaustion, kind of the buyer is not really managing to hold it.
What is the DAX? Is that the US 30 or is that like?
It's a German one.
Oh, is it the okay. Is it like the German companies? Is it, or?
Yeah, in this case it's the 30. I think there's another DAX 40. I think so.
That's the DAX 30, yeah?
Uh-huh.
Oh, okay. Wow.
Yeah. Interesting. Oh well. You see, working as a team. If one of you had let me know that this is about to happen, I think I set up an alert, but yeah, then I may have ignored it. About to start the webinar, and that just literally completely ignore everything in there.
I saw the fake out, Pedro.
Come on, Ari.
You know me, I love equities. At the open, I'm looking only at equities. I was too busy with the US. But
see, this is when
I was also a DAX on my radar. I got stopped out. Forgot to enter again. Was too busy with the US equities.
What do you trade, Ari?
I trade everything to make money, but what I love the most is equities.
But which ones do you mainly focus on?
Well, but often I trade only the Nasdaq.
The Nasdaq. Okay.
And some currencies and oil, gold, oil.
Okay.
But I like the most the Nasdaq for me. I missed it today. I had a short on the Nasdaq, got spiked. Forgot, well, I didn't have a proper signal to enter again. And just slides all the way down.
Yeah. Yeah, but this could be again. This could be some if you guys are looking at the similar stuff, identifying these levels and the exhaustion after a few days. Those are type of setups that we can start sharing. And the mail cool for them can be LZN, can be DAX, can be even EuroCAD. Sometimes it really provides really good setups as well. Kind of after moving it for a long time. Yeah. even some minor pairs as well. This can be really interesting. And there you go. And it's all outward together.
Yeah, definitely. I'm looking to leave you guys now. So it's okay.
Yeah.
It's the 8 o'clock for us. Just need to do a couple of things.
Yeah.
Appreciate the time.
Yeah, you too, Yusuf. Thanks for
Thank you very much
for attending again. And yeah, it's basically done as well. If you guys don't have any more comments, it's easy to do this. If you want to practice, just go back and try to kind of separate the type of movements that you see in the kind of the cycles that you see on price, and separate them. Can be all the way through lower time frame, a little bit to bigger time frame, but because then it's going to be a lot about trusting the analysis that you are seeing in terms of actually maybe where actually price may be heading, because then can work as a target eventually in the future. So yeah, so you can do that exercise if you want to. Yeah. All right, guys.
Thanks, man.
Thank you, guys. Again,
you.
next Friday. Yeah, next Friday. Ron and I are going to do a webinar again, focus a bit more on performance, on the Q1 review, and so on. So
yeah, I look forward to it. What time are you doing on Friday?
I think we are doing 11 a.m.
Well, this Friday?
Yeah. Yes.
It's not the 5th, right? No, this Friday is the 30th.
No, it's 28th.
Okay.
28th of April.
11:30 maybe. 11, yeah, 11:15.
You mean 11:15 or quarter past?
Yeah,
it's going to be. It's going to last 1 hour, right? It's going to be kind of.
Okay,
okay.
I might jump on a little bit later.
Yeah. Yeah. Okay.
Friday,
No problem.
Friday 11 a.m. is 2 p.m. our time. I'll just be able to make it back from Friday prayer. So yeah, 15-20 minutes after that, I'll jump back in. I'll jump.
Fantastic. Is it? Yeah.
Crazy day. The Dow Jones on the move again. This time it's dragging down the equity market.
I'll see you guys later on. Yeah.
All right. See you. Thank you, Yusuf.
Right.
Okay.
Bye-bye.
Yeah. Thank you, guys. Again, if you have any kind of question that maybe you'd like us to cover or anything like that regarding to performance, to mindset, whatever it may be, you can ask me maybe then for us to cover, and you're going to be able to ask questions as well either way, when you're in there. And it's something that you're again trying to do every quarter. Yeah, let's just try to see.
Okay.
All right, guys.
Thank you, Pedro.
Yeah, thank you, Ari. Thank you, Mohammed, Kyriakos, Yusuf. Again, cheers, guys. See you tomorrow.